Hello and welcome. You're watching First Stick here on News 9, where we bring to you the morning buzz on the Lal Street. And a very, very good morning for the Indian markets on a very, very constructive setup from the global markets as well. Amit, over to you.
Thank you, Sriyash. Good morning. It is global markets all in the green. Nasdaq has surged 2.2%, likely the biggest surge in 2 months that it has witnessed. S&P 500 surged 1.41%, Dow closed up 0.58%. This was basically, the rally was driven by tech stocks, and primarily the Apple stock, which surged 2.42%. It is driven by the optimism towards the Vision Pro product that they have unleashed. Coming to the Asian markets, the People's Bank of China hinted at increased rate cut in the reserve ratio, and that gave impetus to the optimism. Hang Seng is at 0.31% in the positive. Nikkei is at in the positive at 1.16%. So all green. Even the European markets, I missed that out, closed in the positive at 0.38%.
All right, and overall the setup is looking rather constructive, and this is something that we have not seen yesterday or the whole of last week. As a matter of fact, US crude now, the oil prices have declined by about 4% or so. WTI and both Brent crude are down by 4%. Brent, for a matter of fact, is hovering around the $76 a barrel mark. Now, this is after Saudi Arabia slashed its prices, raising fresh concerns that the market is oversupplied, and at the same time demand is weakening. Dollar index also corrected marginally. Now DXY, the last time I checked at least, was down 0.07% at 102.12 sort of levels, while the US 10-year treasury yields are still hovering around the 4% mark, but there is a slight bit of correction, about 5 to 10 basis points. Back home, Indian markets witnessed a very strong start to the session on Tuesday, with Nifty opening almost 150 points higher above the 21,650 mark. Now, the broader markets are also participating in this pullback, and both mid cap and the small cap indices have added by about 1% or so. And this is a very curious case, because yesterday we saw a big I won't call it a crash in the market, but we saw a big pullback where the market gave about 0.8 to 0.9%, and the broader markets, they had fallen about 1% or so. But to understand the kind of wild movements that we are seeing in the markets in the last couple of sessions, let's also bring on board Mr. Brijesh Iyer of IDBI Capital Markets. A very good morning to you, Brijesh. Thank you for joining us here on News 9. Now, on Monday, me and Amit were just talking about how we had lost all that was recovered in the previous two sessions. Today, we have had a very strong start. So, what are you making of these wild swings? Do you think yesterday's pullback was just that, a one-off pullback?
Yeah, morning, Suresh. So, yesterday, there was a correction. Basically, from the technical term, we will term this as a distribution. After the the recent run up, I think this is the profit booking which Nifty saw yesterday. So if you put from the charts perspective, the levels are broken. So it almost came to 21,500 level too. I think 21,517 was the close for the Nifty. So with this, for this week specific, I believe 21,800 is likely to be the cap. So that level, it doesn't look like it will be taken out very easily. We are of the opinion that today what we are seeing is just a breather of yesterday's correction. So today is a slight pullback is what we are seeing. There is a fear. I think maybe that 21,500 might be broken, and I sense 21,300. That can be the projected support for the week. This is what my view is. 21,300 to 21,800. This would be the range for the Nifty. My view will go wrong if 21,800 is taken out on a closing basis. So as long as 21,800 is not taken out, I am going to be cautious on the market from the profit booking point of view, and I would be looking to add my longs whenever the Nifty approaches close to 21,300 level. Those are the areas where I will again start looking for the positional long trades. And the trading bets, I believe I can keep trading in the with a very stock specific approach. I can take the view, but then directionally, I would like to wait for some correction. Even the one of the main reason is if I look at the FI index data, so both in Nifty futures and Bank Nifty futures, FI has sold yesterday. It has been a huge, big chunk of selling which we saw in yesterday. So I think today, by any chance, if there is a further correction, okay, I believe because of the global market and everything, the markets are up. But I will view this as a breather of yesterday's correction, and we would like to wait. Same for the Bank Nifty, 48,000 is a very major trigger. It's a resistance. Only if 48,000 is taken out, then I will go aggressive long on the Bank Nifty. Till then, it will be a very stock specific trades within the Bank Nifty. Axis and Indesin are the two stocks which can be bought whenever there is a correction. But then one has to be cautious, is what I believe, at least for the current week.
All right, and in an otherwise buoyant market, one stock that is not doing so well is Z Entertainment. Shares of Z Entertainment in fact opened about 10% lower in early trade today, after reports yesterday suggested that Sony may after all plan is planning to call off that $10 billion merger that has been in work since 2021. Now the company, at least the reports that we are reading, they suggest that Sony is looking to cancel the deal over a standoff on whether Puneet Goenka will continue to lead the merged entity. But coming back to the stock, this is one of the worst falls we have seen in recent memories. The stock was doing fairly well in the last few months on reports of this potential merger taking place. What's your initial thoughts on these reports? And after the 10% sort of a correction, can we expect further pullback from here on?
Suresh, from the sentiment point of view, it is negative. But for the positional player, I think this is it's the best opportunity, because if I do look from the technical perspective, the value of this 200-day moving average comes close to 232 mark. And today, whatever the corrections we are seeing at, I think right now it's close to 250 levels. This is a beautiful opportunity, because the long term parameters for the Z Limited remains extremely positive, because our analyst has a very strong opinion that the consensus expectations would be somewhere close to 48% CAGR, which is the bottom line for the Z. So we are extremely positive. For the somebody who wants to take a positional view, I believe one should take that call. Maybe there won't be a trading opportunity. Maybe it might again come by another 10 odd points on the down from the current level. But this is a very strong positional bet.
Good morning, Brijesh. Another stock which saw a surge of almost 10% yesterday was Honasa, the mother brand of Mama Earth. And it was on the back of one big sale involving 32.6 lakh shares that took place, which accounts for almost 1% of the company. It peaked at around 490.2 yesterday. Today it had gone up to as much as 496, and even as we speak, it's back to around 490 levels. Has it peaked, or is it still a buy for the investors?
It will be too difficult, because it's very limited charge. But if I look from the trend perspective, it has broken its previous high. So basically, it is in uptrend. Somebody who has a long-term view I think, can get into the stock. But somebody who wants to play for that momentum trade or trading opportunity, I think those should avoid. Positional players may have their positions holding to this counter.
All right, and another stock that we would want to touch on is Paytm. Now, on December 7, we saw about a 19% or so crash after the company decided to, close some of its lending businesses. But from there on, we have seen a good bit of recovery. The stock in a matter of 16-17 sessions is up about 15% from the low, but still about 15-16% from the levels it was at before this fall. Now, do you expect this recovery to continue, or, pullback is due from these levels?
Suresh, I think there can be recovery. So whatever the news which we are hearing for the Paytm, and from the charts perspective, there was a gap down on the 7th of December. So that gap needs to be filled. and the value of the 200-day moving average comes at 790 marks. So I think somewhere this gap will be filled in the near future. So I think I would like to take the buy trades today. The counter is down, maybe close to 650 levels. Whenever it comes to 650 level, I think I will play for 100, 150 points on the higher side. We have positional, like we have a positive bias for the stock.
Okay, Brijesh, what would you recommend for the investors today, the stocks in your bag?
Yes, very selected since I'm not very positive in the market. The selected stocks, for example, Elecon Engineering, something which is good on charts, given a range breakout. I think one can buy at the current price with a stop loss of 965, the target of 1050. So again, maybe 10-15 days kind of time frame. It's a positional kind of a trade. Next one, which we were tracking, was Phenolics Phenolics Industries at 236 level. We can go long with a stop loss of 221 for the target of 265. Again, the directional call. And one more is the Kalyan Jewelers. Again, this has seen some good momentum and the volumes coming at the current level, and it didn't correct with the overall market. I think that can be some further upside. We can buy the current price of 372, 370, that with the range stop of 360 and target of 398.
All right, those are the top picks from Brijesh Iyer in this current market, which is turning out to be quite choppy. Brijesh, always a pleasure talking to you. Thank you for joining us here on News9. But before we move on, let's take a short break. We'll be right back, and Mr. Mohit Gang from Moneyfront joins us on the other side.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
This was intended to be a terrorist spectacular without precedent.
The plan was to bomb 2 Air India passenger aircrafts simultaneously.
There was a loud explosion and the whole plane just vanished.
The police dropped the ball, the intelligence officers dropped the ball, and the politicians dropped the ball.
It was a conspiracy that destroyed my life. It destroyed 331 lives.
News is now content. Just stream it. Download the world's first news OTT, News9 Plus, ahead of the curve.
The scale of the attack was something that we were surprised at. David Hadley was a double agent. The Americans did not want him to be fully exposed, so all that he probably shared with the Americans was not shared with us in terms of intelligence. If we had that, I'm sure that we would have been able to deal with the situation far better.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News 9 Plus. Ahead of the curve.
Welcome back. You are watching First Stick here on News 9, and Indian markets are holding on to the early morning gains, but they are off the day's high. Nifty, as we speak, is hovering somewhere around the 21,620 mark. The day's high is at 21,673, so we are just about 50 points shy of the day's high. Sensex also is up about 300 points or so at 71,713 levels. The mid cap index has given up some of the early morning gains. The index opened about 1% higher, but as we speak, it is still above the 47,000 mark, up 0.28%. The small cap index is holding on to the early morning gains, and the index is up 0.72% above the 15,450 mark. India VIX, now that has declined by about 3.5%, and it's now below the 13 sort of levels, and this is for the very first time since early December 4 or December 5. So quite a significant dip in volatility. But with that, let's also bring on board Mr. Mohit Gang, co-founder and CEO and Money Front. Good morning, Mohit. Thank you for joining us here on News 9. Now, I want to begin by asking about the potential inclusion of Indian government bonds in the Bloomberg Emerging Market Index. I have two questions here. What do you think, what kind of inflows are you expecting from this inclusion, and what will it mean for Indian equities?
Hi, morning Suyash, always a pleasure to be with you. Look, so I think this was writing on the wall. Last year when JP Morgan kind of included India's bond in their global index, I think a review was due by Bloomberg also. And in fact, few other larger agencies of the world should also follow suit in some time. And I think it's India's reckoning movement. Basically, I think JP inclusion happens effective June, and that should lead us to a very, very huge inflow of almost 20 to 30 billion over next 1 or 2 years. The Bloomberg index inclusion might not lead to massive inflows. My sense is for the initial first couple of months, it should be in the range of around 2 to 3 billions, leading up to 5 billion by around September. However, it's not always about the inflows, it's also about the symbolism of this entire inclusion. And I think the global peers accepting India's bond in their indices leads to a very big signal to the global investors. You will see a lot of inflows coming in. Consequently, that should lead to yields easing off in the country. Currently, the 10-year, if you see, is hovering around in that range of around 7.2 to 7.25. Yield should dramatically ease off post-June because A, there is no incremental risk of further rate increases, as we all know and we have been discussing on this show. And B, because of these bond inclusions, we will see a huge inflow coming in. And that should yield off some pressure on the yields. Now that consequently should reduce the cost of capital and cost of borrowing dramatically in the country, which in turn, to answer your question, Suyash, should benefit the corporate the corporates also to a large extent, because I think corporates are massively deleveraged on a whole as we speak today, and the corporate capex cycle is long overdue now. So yields easing off, the borrowing costs coming down will ease off pressure on the working capitals, will improve the payment cycles for the corporates, and will improve the overall environment on the borrowing front. So my sense is corporates will find it easy to borrow, and that should give a good pickup on their bottom line numbers, and should give a good robust capex formation ability to the corporates on the whole, right? So my sense is this is a very, very positive signal, very positive move. The repercussions is it will trickle down to the entire economy, and in next 6 months odd, which is from June to September period, I think we should see the benefits of this coming down.
All right. And moving on, Bajaj Auto has announced its 4,000 crore buyback at a price of rupees 10,000 per share. Now, this gives us an upside, at least potential upside of 30%, because the stock has also jumped, in early morning trade. It's up somewhere around 3% or so. But, given the size of the issue, I think retail participants won't be able to benefit much, because I think the acceptance ratio works out at somewhere around 10%, isn't it?
Look, so acceptance ratio might not be great. Honestly, I think it's a 4,000 crore rupee kind of a buyback. And I think Bajaj Auto has made it very clear long back also that as and when they touch around 20,000 crore rupees in cash on the balance sheet, they will try and pay back 1/3 of it to the shareholders in some form or manner. So along with dividends and with this buyback, I think they should reduce the overall cash on the balance sheet to roughly around 15,000 odd crores. Even the promoters are participating in this buyback, which is a very, very healthy sign. Right, and I think promoter holding should inch up by around 0.7% after the overall buyback, basically. So the retail investors might not make a lot of money, but whatever you can tender and whatever gets accepted, I think that will make some amount of money. 30% immediate gain is a fairly decent gain to go for, and that's, I think, one of the reasons why the stock has run up in last 6 odd months is anticipating this buyback, right? So, but even if you don't find an opportunity in the buyback for retail investors, it's a good long-term hold. The way the company has been generating regular cash, the way the dividend flows has been increasing, and the way company is very focused on returning back the extra cash on the balance sheet to investors, I think these are all very, very healthy and good signs for investors in the long term. So my sense is even if retail doesn't get too much of opportunity in the buyback, there's no harm continuing to hold the stocks for a fairly good upside in the long term.
Good morning, Mohit. Now, the festive season has come and gone, but the FMCG sector does not seem to have benefited any. Going by the Q3 results updates, across the board, the stocks fell yesterday, be it Dabur, Marico, Godrej. Report of flat sales and weak volumes growth in October to December quarter were the indicators of that. Volume recovery in India has been weak. Low raw material costs may support gross margins. But the rural demand, it seems, has failed to match up to the urban demand with the FMCG sector. Be it Godrej Consumer Products, Marico fell as much as 3.99%, recovered a little today. Dabur, Tata Consumer Products, ITC, across the board, they all fell. So is it really the rural demand, or is it the unorganized sector that is beating the big brands?
Thank you, Amit. So look, I think, yes, I kind of agree, and we have touched upon this in our previous shows also, that in spite of the urban demand being whatever it is and the urban consumption going fairly strong, the rural demand hasn't picked up, and which is a cause of worry. Even if you see the agricultural sector growth, the breakup of agricultural sector growth in the overall GDP numbers which were released recently, the agricultural sector has only grown by around 1.9%, which is a cause of worry, to be very honest. I think it was partially to do with the uneven monsoons last year. And also, I think people were hoping that the overall marriage season and the festive season should lead to pickup of demand. The pickup, it doesn't look as if has been up to the expectations, but my sense is, and I remain fairly positive out here, I think market is also kind of weighing down on these stocks in anticipation and getting them at par in terms of valuations and everything. So my sense is this first quarter, because of leading up to elections, I think we should see a good pickup in the rural demand. Rural demand is always a trickle down impact of the urban demand, right? And just a case in point is the overall construction sector and the realty sector. The way it is doing, that overall impact of that sector is massive on the rural demand, because you find a lot of rural migrants and a lot of rural population finally leading up to that. So my sense is the rural demand should pick up in Q1 and Q2. However, FMCG stocks can continue to be under pressure for the first quarter or maybe perhaps first half of this year. And from there on, I think they should find a reasonable base and some consolidation should happen from there on. But I would still stay away from this pack for some time to figure out what actually is happening on the ground, and perhaps leading up to the monsoons this year, will remain cautious on this entire pack.
All right, moving on, the first initial public offering of 2024, Jyoti CNC Automation, has opened for subscription today. What's your take on that? Should one subscribe to the issue?
It's an interesting issue, Suyash. Look, so I think whatever is going on in the IPO markets it's honestly crazy and maddening, and it sounds very difficult and sounds very esoteric if I say that one has to be really cautious about this one. In terms of valuations, I think the valuations are a little too steep on this one. Plus, the overall financials of the company aren't looking in great shape for last 2-3 years. The company has been running some losses, but to put it positively for the company, it's the only listed company, or will be the only listed company in the CNC market in India, right? So and they enjoy almost 10% market share. They've acquired a French subsidiary, I think last year, which hasn't been doing last year. No, sorry, I'm not sure when did they acquire the French subsidiary, but that subsidiary hasn't been doing that great, and which is kind of dragging down the overall results of the company, basically. But this space is very, very niche. The computerized control systems for machines is a very niche area. It's kind of a monopoly area where the company is. The promoters have huge wealth of experience in this entire thing. So from a very long-term perspective, which is 3 to 5 years, the stock looks fantastic, to be honest. And the use cases of these kind of machineries in various industries are massive, in auto industries and defense industries and manufacturing, of course, right? So the use cases are huge, and the potential is massive. I would just wait and watch to figure out how does the company kind of spruce up its financials, the balance sheet overall, the valuations kind of becoming reasonable, either by virtue of time correction or by virtue of some value correction happening at a later stage. For investors looking at a quick listing gain, perhaps if the market remains buoyant, maybe this will give an opportunity. Maybe this will give an opportunity if the market remains in the mood in which it is and the market remains buoyant. But for long-term investors, yes, it could be a good buy if you have patience for 3 to 5 years, and this is a good space. I think the only company which comes close to it is Lakshmi Machine Works, which does some kind of work in this space. But otherwise, there's no comparative peer for the company.
All right, that's the view on Jyoti CNC. May not give stellar returns on listing, but can be a long-term bet. That's the view coming in from Mohit Gang. Sir, always a pleasure speaking to you. Thank you for joining us here on First Take.
Thank you so much, Suresh. Thank you.
But Amit, looking at the markets, they are holding on to the morning gains. In fact, they have clawed back what was lost, and Nifty, as we speak, is hovering somewhere around the 21,650 mark. We are facing some bit of a resistance around those levels, but good bit of recovery, and especially after a session like yesterday's, where we gave up so much. Nifty, pretty much lost all that it had made back from that Thursday and Friday sessions. But a good bit of a mood in the Asian markets has uplifted Nifty as well. Nifty, as we speak, as I just mentioned, is hovering somewhere around the 21,650 mark. Sensex is also inching towards the 72,000 levels. We are not quite there yet, just about 250 points shy of those levels. The broader markets now, they are also quite buoyant. They were actually the underperformers yesterday. They had corrected by about 1% or so, but this morning they are trading with healthy gains. Nifty Mid Cap 100, as we speak, is up 0.41% above the 47,000 mark, and the index is in fact taking support at those levels and trying to move higher from there on. Nifty Small Cap is also attempting to make a new record high, in fact, and it's inching towards that 15,500 mark. As of 10:10 a.m. currently, it's up about 0.86%. Volatility continues to slip. India VIX, as I mentioned earlier, is at its lowest level since December 4th of 2023. So the lowest levels in nearly 20-25 sessions or so. It's down about 3.5%, sitting at 12.99 sort of levels. Among sectors, most are trading in the green except the media pack, and that is probably because of weakness that we are seeing in Zee Entertainment, which, by the way, is down about 10% on reports that Sony may call off the potential merger that has been in works since 2021. But that's all we have in this edition of First Take. But stay tuned with us as we'll be right back with Business Plus on the other side.